Navigating the shifting sands, key considerations when investing in commodities and precious metals. Introduction. The allure of commodities and precious metals as an asset class has endured through centuries, offering investors a unique avenue for diversification and hedging against economic uncertainties. Whether it's the gleam of gold, the industrial significance of copper, or the energy powerhouse that is oil, investing in commodities requires a nuanced understanding of the market dynamics, global forces, and unique challenges that define this asset class. This exploration delves into the key considerations that should guide investors as they traverse the often volatile landscape of commodities and precious metals. The diverse universe of commodities. Commodities encompass a vast array of tangible goods, spanning energy resources, agricultural products, base metals, and precious metals. Each category carries its own set of supply-demand dynamics, influenced by geopolitical factors, weather conditions, and technological advancements. Investing in commodities demands a keen awareness of the unique drivers that shape each market segment. For instance, energy commodities like crude oil are sensitive to geopolitical tensions, OPEC decisions, and global demand fluctuations. In contrast, agricultural commodities such as soybeans and wheat are susceptible to weather patterns, crop diseases, and changing dietary preferences. The intricate dance of supply and demand in each commodity category underscores the importance of conducting thorough research before entering the market. The intrinsic allure of precious metals. Precious metals, notably gold, silver, platinum, and palladium, hold a special place in the hearts of investors. Beyond their aesthetic appeal, precious metals have served as stores of value throughout history. Investors often turn to gold as a hedge against inflation, currency fluctuations, and economic uncertainty. The key consideration when investing in precious metals lies in recognizing their dual role as both commodities with industrial applications and safe haven assets with enduring allure. For instance, gold exhibits a unique blend of industrial demand in sectors like electronics and jewelry, coupled with its status as a timeless store of value. Silver, on the other hand, shares industrial and investment attributes, finding applications in solar panels and as a more affordable alternative to gold for investors seeking precious metal exposure. Global forces and market sensitivity. Commodities and precious metals are inherently global assets, their prices influenced by a myriad of factors on a worldwide scale. Changes in global economic conditions, geopolitical events, and shifts in consumer behavior can reverberate through commodity markets. Investors must remain attuned to these global forces, recognizing that events in one part of the world can have far-reaching implications for commodity prices. Consider the impact of a geopolitical crisis on oil prices. Tensions in oil-producing regions can disrupt supply chains, leading to heightened volatility in oil markets. Similarly, economic downturns can suppress demand for industrial metals like copper, signaling a broader economic slowdown. Successful investors in commodities and precious metals understand the interconnectedness of global events in commodities markets, adjusting their strategies accordingly. Supply and demand dynamics. The fundamental forces of supply and demand play a pivotal role in determining commodity prices. Changes in production, technological advancements, and shifts in consumer preferences can alter the delicate balance between supply and demand. Investors in commodities must carefully monitor these dynamics, recognizing that supply disruptions or surges in demand can lead to significant price fluctuations. Take the example of agricultural commodities such as coffee or cocoa. Weather-related events, such as droughts or floods, can impact crop yields, influencing prices. Similarly, advancements in technology can affect the supply of certain metals, such as the increasing demand for rare earth elements in the production of electronics. An astute investor in commodities and precious metals conducts thorough supply-demand analyses to identify potential investment opportunities and risks. Currency impact on commodity prices. The relationship between commodity prices and currency movements is a critical consideration for investors. Many commodities are priced in US dollars, and fluctuations in currency values can directly impact their prices. A weakening US dollar often leads to higher commodity prices, while a strengthening dollar can have the opposite effect. Investors must factor in currency dynamics when assessing the attractiveness of commodities and precious metals in their portfolios. For example, if an investor expects the US dollar to depreciate, they might consider allocating a portion of their portfolio to commodities as a hedge against potential inflation and currency devaluation. Conversely, in a scenario where the US dollar is strengthening, investors may adjust their commodity exposure to mitigate potential downside risks. Market liquidity and investment vehicles. Commodities and precious metals markets exhibit varying degrees of liquidity, influencing the ease with which investors can buy or sell positions. Liquidity considerations are crucial, as less liquid markets may experience wider bid-ask spreads and higher transaction costs. Investors should assess the liquidity of the commodities they are interested in and select appropriate investment vehicles that align with their risk tolerance and investment horizon. Exchange-traded funds, ETFs, commodity futures contracts, and commodity-focused mutual funds are among the investment vehicles available to investors seeking exposure to this asset class. Each vehicle carries its own set of risks and rewards, and investors should carefully evaluate the liquidity, costs, and tracking mechanisms associated with these instruments. Conclusion. Investing in commodities and precious metals is a journey through a multifaceted landscape, where the glitter of gold, the hum of machinery in industrial facilities, and the sway of wheat fields converge. To navigate this realm successfully, investors must assimilate a comprehensive understanding of the diverse factors that shape commodity markets. Whether considering supply and demand dynamics, global forces, or the impact of currency movements, a judicious approach to investing in commodities and precious metals demands constant vigilance and a willingness to adapt to the ever-shifting sands of this captivating asset class.